After configuring the necessary settings, the next step to set up the program is to set up the account periods. To do this, navigate to the menu Setup. Then select 3, Account Periods. Once on the screen, the user will see the program's accounting periods. The program provides up to 24 periods, representing 2 years. However, a typical accounting cycle consists of 1 year or 12 periods. The 24 period is for users who have already finished the first 12 periods and need the New Year's transactions to continue uninterrupted, but are unable to close the account or issue financial statements because their business needs an audit to check whether there needs to be any changes. Once the user is ready to close the accounts for the current year, users can do so without affecting the following year's periods, since the program's closing process is aligned with standard accounting practices, closing only the first 12 periods and leaving the subsequent 12 periods for the next fiscal year. The most critical aspect of setting the accounting period in the program is correctly configuring the start of fiscal year field. This is where many users tend to make a mistake, as they often assume it refers to the date the business begins using the Express program. However, this is not the case. The start of fiscal year actually refers to the date the business starts paying corporate tax, which typically follows the calendar year, from January period 1 to December period 12. For businesses with a fiscal year that does not align with the calendar year, the start date should be adjusted accordingly. It's important to note that the start of fiscal year has a limitation, which is that it can only be set once, when creating a new business in the program. Afterward, the start of fiscal year cannot be modified manually. Instead, the program will automatically update it when you close the accounts at the end of the fiscal year. In this example, we'll use the current year, 2567. Another key point to note is the 24th period. Notice that the date in period 24 differs from the dates in the other 23 periods, and there is an asterisk next to it. Users can find an explanation for this below, which says, Note, end of period number 24 can be postponed unlimitedly. Period 24 typically comes into play when the business has not closed its accounts or submitted financial statements, or when it needs to continue operations beyond the 2-year timeframe provided by the program. Since changing the start of the fiscal year is not possible, period 24 allows for flexibility by enabling users to extend the accounting period. For example, if users are working in the current year 2567 and the program allows operations until the end of 2569, but user needs to extend the period for another year, the user can do so by editing period 24. To extend the date, click on the editing command. Select period 24 and change the date to your desired end date. For instance, users can set the new end date to 31/12/2570. Finally, click the disk icon above to save the changes, and then click OK to confirm the adjustments. Expanding the accounting period has both advantages and disadvantages. The advantages is that it allows access to historical data spanning up to 3 or more years. However, there are disadvantages to consider as well. First, the file size increases due to the additional data, which can slow down system performance. Another disadvantage is related to certain reports. When you assign period 24 in a report, the program will combine the data from month 12 to that of the next year. To illustrate, in this case, the program will combine the total from month 12 of the year 2569 with the data from all documents in 2570. As a result, the calculated figures may be inaccurate. Additionally, for businesses that use the program to calculate product depreciation, we strongly advise against expanding the period. This is because the program calculates depreciation on a daily basis. In the first 12 periods, or 1 year, depreciation is calculated correctly over 365 days. However, when depreciation spans multiple years, such as 2569 and 2570, the program incorrectly calculates depreciation by multiplying 365 by 2, leading to inaccurate values. For businesses needing to operate or review historical data over multiple years, we recommend creating a new company in the program instead of extending the period. This ensures accurate reporting and calculation. Once users have completed the setup for account periods, no further changes are required. To exit the screen, simply click the X at the top.